Hey guys, a lot of people are asking, Dan, when will Ethereum go mega bull run? So I'm going to give you some of my personal thoughts on this. Again, this is not financial advice, just an entrepreneur who built the largest Bitcoin mining facility in Utah in 2014. So here's my theory on what's going to happen. By the way, my head is okay. I somehow slept face down and my iPhone charging cable somehow imprinted a line on my forehead. Okay. ADD, let's get right to it. Okay, so Ethereum. So Bitmine is now the #1 holder of Ethereum as far as big institutional buy. And they're doing what MicroStrategy did with Bitcoin. Now you can graph MicroStrategy's chart, but Bitmine, Tom Lee, is acquiring billions and billions of dollars in Ethereum and is just beginning. Many competitors to what he's doing are going to launch in the market, just like you saw with Bitcoin, with this mass accumulation of institutional buy-in. And the reason why something like this is so effective is a couple things. One, it's easily traded on the stock market, but when they acquire Ethereum into their treasury now, they usually take that and they back it, especially with the Genius Act, with treasuries, U.S. treasuries. At least that's what MicroStrategy is doing, a lot of these other companies. And they can earn a 4% yield holding other people's money. So they're just printing money. You're seeing Circle USDC doing this with USDC. If someone deposits, billions of dollars into that, they buy treasuries with that and earn, let's say, a 4% yield on it for just using someone else's money. And that easily covers their operational costs. And there's other more detailed strategies that they use to make their stock go up as well. So all kinds of cool things happening there. Now, this is going to continue to happen, not just with Ethereum and not just with Bitcoin, but with other tokens. There's a rumor that you're seeing an ETF file for HBAR, Hedera. You're seeing, obviously, Solana ETFs. You're seeing bucket ETFs. All these things to make it easy for normal consumers to buy crypto products on the stock market. But here's the thing. A lot of those assets, though, aren't necessarily a good buy instead of buying the crypto itself. And the reason, though, is you're paying a management fee for a single asset. Now, sometimes they can be a decent buy if there's a lot of speculation on that stock, and obviously that stock rises, combining the speculation with the asset and what they're doing to earn yields on their treasury holds. But here's the thing I want you to think about this week. As these institutions continue to buy Ethereum, Bitcoin, and all sorts of other crypto in the future, they typically don't sell. They don't sell typically because they've used that treasury and used that to buy treasuries, right? And as larger institutions, pension funds across the country and all that institutional investors start investing in, they typically don't day trade. They're into the long holds. Why? Because they're looking for long-term capital gains. See, when you're a day trader, you pay short-term capital gains, and you may pay over 40% tax rate on that, whereas on long holds held over a year, just like with stocks and real estate, you would pay a lot less taxes, sometimes about half of the amount of income tax on those holds. So if their goal is long-term appreciation and low taxes, there's going to be less selling. And as more accumulation happens, that's going to create more scarcity. One more fun fact for you newbies out there. Bitcoin, for example, has 21 million Bitcoin. A little over 19 million have been mined, and over 6 million, they estimate, have been lost because people lost their passwords, seed keys, wherever it is. So this creates scarcity. So I believe there's going to be a big supply crunch on a lot of these different tokens, especially if they're deflationary tokens or if they're fixed supply. So you're going to see more and more this happen. And you're going to see more and more initiatives passed in crypto to even burn tokens at certain time intervals. What does that mean? That means, let's just say there's 20 million tokens of a certain token or 20 billion tokens. Well, a lot of times the founders will do is they'll code it in there that a certain amount of this token is burned, right? Or just deleted off the blockchain to facilitate transaction. This creates scarcity in supply. That causes it to rise. So When I say we, it's Bridger Pennington and I at the Ugly Unicorn Crypto Hedge Fund. When we're looking for our investors for deployments, a lot of times we look for deflationary projects. Now you mix that with actual real world application, AI, digitizing car titles, real estate, all those precious metals, all those kind of things. When you're investing in products that have actual real life application, then you see a lot more sustainment. Again, and I bring you back to the dot-com bubble of the early 2000s when Amazon dropped literally, I think it's something like $6. It was 80% off all-time highs. Crazy, but it had functional utility. It actually did something, so the value kept. And to this day, Amazon is a very, very cool company. And if you own their stock since the early 2000s, you're a happy camper. So it feels like we're actually living in the same opportunity as the internet boom in the early days. And I didn't think I'd live to see it, but it's awesome to see that mixed with AI right now. And that's why we're looking for hybrid projects. Now, one last thing, we're approaching, it's the 18th, so we're getting closer to the end of the month. If you are an accredited investor or higher and can deploy 100,000 or more, most of the investors are putting in quite a bit more than that, but 100,000 minimum, and you're interested in the Ugly Unicorn Crypto Fund that Bridger Pennington and I run, we have to get docs signed and wires in before the end of the month. So make sure you direct message me if you're interested, or if you have some friends that are interested, direct message me. Now, I understand, again, that a lot of you guys and girls are not accredited yet. And this is why I give this knowledge to you. For how much? 20,000, 100,000 a year? It's zero. But all I ask you do is comment, like, share. Comment, like, share this. Oh, and save this too. And then you can mark my words and see if my predictions came true. But comment, like, and share in this so we can help more people out there become knowledgeable about crypto. Right now, on the open, you're going to see crypto right now, since last night, has taken a little bit of a correction, but not massive. We're within, upper 4-5% on a lot of projects right now. Maybe some smaller projects a little bit higher, but very small blip. What did I do? First thing this morning, I dollar cost averages and bought more crypto. So again, if you're an accredited investor and you're interested in the Ugly Unicorn Crypto Hedge Fund, direct me, myself, or Bridger. Actually, you can just direct message me since this is probably on my feed. And then me and Bridger will walk you through it. If you're a not accredited investor, watch these videos and take note and really get into your head this concept of accumulation by institutions and dollar cost averaging. All right, take a moment, share this video because I love you.